So today we're going to be talking about something which our clients tend to pick up and want to discuss a lot. It's a very popular subject and something that probably everybody's got an interest in, which is business expenses, whether that be what can be eligible for tax relief, what the company should be paying for, or your sole trader business, or what type of expenditure should be incurred personally. And I guess it's fair to say that rules and regulations in this area are always evolving and changing, and therefore getting good advice on business expenses, how to treat them, who to pay for them is an ongoing area of importance for all our clients.
Agree, and I think that is one of the most common questions we get from clients. Like you said, whether you're a company or sole trade partnership, the tax deductibility of expenses is something at the forefront of our clients' minds. Yeah,
so I guess at a simple level, before we delve, because I'm aware that there's quite a big difference in some areas as to whether you are an employee or director of a limited company or whether you are an unincorporated business. And what we mean by that is sole trader or partnership. But before we start to look at the differences between the two, is there a rule or a phrase or something we can hang our hat on that says this defines what a business expense is?
Yeah, and I think this is very clearly set out by HMRC. So for a expense to be allowable for tax purposes, has to be incurred wholly and exclusively for the purpose of the business.
Right.
So what does that mean? So that generally means that it has to be used for the sole purpose of that business, and it mustn't have a duality of purpose.
So duality of purpose in that regard, I guess something that you could use or consume for both business purposes and personal purposes. So, the shirt that you're wearing, for example, not logoed with Lovell Blake, and ultimately you could wear that out on a Friday night. Equally, you could wear it to go to work. So that duality of purpose means that shirt that you're wearing is not a business expense and you can't claim tax relief on that. Is that fair?
Yeah, that's absolutely correct, James. Yeah, any suits that I wear for work, although I am an employee of Lovell Blake, but ultimately, if you're a sole trader, then unless it meets the definition of a uniform, then that expense wouldn't be allowable.
So when we take that down a level, then we talk about a limited company, directors and employees of a limited company versus a sole trader business or a partnership. Can you set out the key differences between those two business structures and specifically, I guess, how they impact on what a business expense looks like and how it is taxed or how the relief is obtained?
Yeah, I suppose, if we go back on a high level and look at this general principles on how profits are calculated for, let's say, unincorporated businesses and companies, they're very, they've got very similar structure on how they are how they're calculated.
Yeah.
So ultimately, a set of financial accounts would be prepared by your accountant if you're a sole trade partnership or a company under UK general accounting principles. Broadly, that'll take your turnover less your expenses, which leaves you with a profit.
Yeah.
Now, the next step is that there's a tax adjustment to various expenses within those accounts to then arrive at a taxable profit. If you're a unincorporated business, those profits will be calculated on a rising basis, usually entered on your self-assessment tax return, with income tax and national insurance reported on the taxable profits of that business. Whereas when you look at a company, it's a separate legal entity, separate and distinct from the individuals that run that company. And again, you'll prepare the accounts under general accounting principles, add back any non-deductible expenses for tax purposes. That taxable profit is then subject to corporation tax.
I guess where a client may have seen these adjustments before, certainly when I sit down with my clients at the annual accounts meeting, we'll go through the accounts, we'll get to an accounting profit, and then ultimately I will explain how we take that accounts profit and adjust it for the figure that tax is charged on at the marginal rate of tax. And typical adjustments in that regard could be depreciation. That's a common one, I guess, where depreciation, the writing down of fixed assets through the accounts is removed from that profit figure. It's added back to increase the profit figure that's subject to tax. But equally, then you get capital allowances, which is the tax relief on the purchase of assets. But that adjustment is why the accounting profit is different to the tax profit. And what you're saying is a lot of these business expenses that may not meet the definition, that's the stage at which they are removed from obtaining tax relief.
Yeah, that is correct. I think you pointed out one of the biggest or most common adjustments we see is for the depreciation.
Yeah.
There are also other expenses that might not meet that wholly and exclusively criteria. So sort of other common adjustments that we see are sort of like legal fees for capital expenditure, fines and penalties.
Yeah,
so if, for example, a company incurs maybe a parking charge or a speeding fine, then there might those expenses aren't deductible for the.
You can't get tax relief on a speeding fine, can you?
You can't, I'm afraid. And then also another big or more common adjustments we see is regarding client entertainment, and there is a fine line between what's classed as client entertainment and then what's classed as staff entertaining as well.
So from a tax point of view, let's take an example. I've got a few later on to hit you with towards the end of the podcast, but let's go into one right now. So you take your staff out for a very modest Christmas dinner once a year. Price per head is relatively small, and the business pays for that expense. Do you get tax relief on that cost?
So from that perspective, that would be classed as staff entertainment. And yes, there is a corporation tax deduction you're allowed for that.
Yeah.
But the company should be mindful that although they get a corporation tax adjustment, there could be either a pay-as-you-earn or P11D benefit associated with providing that entertainment to the staff. So there are sort of the beneficial exemptions that you can have for staff entertaining. One of the biggest ones we see is that companies at the moment can provide an annual function up to the value of £150 per head, without that staff member incurring a taxable benefit for them. If a taxable benefit does occur, then we do see organisations looking at paying that tax on the company's behalf through a pay-as-you-earn settlement agreement, for example.
Okay, so put simply, in that scenario, the company gets the deduction against their corporation tax for that cost. But if it exceeds a certain threshold, which you're saying is £150 per head, subject to other rules, the company would still get that deduction, but the member of staff who benefited from that entertaining may have a tax charge personally that they would have to cover, or the company would need to get involved in settling that for them.
Yeah, agreed.
Yeah. And what about on the other side of entertaining? So customer entertaining, you take your best customers to the Grand Prix or the football or just out for dinner. Is that a deduction for tax as well? Is that in the interest of business?
So that is specifically not deductible for tax purposes, I'm afraid, James. From a viewpoint, HMRC, even though it sounds like it's for the purposes of the business, because you're probably promoting your firm, trying to gain new business, HMRC sees client entertaining as something that isn't tax deductible. That expense can still go through the business account, but you wouldn't receive a tax adjustment for that. And that's so. For example, if I was to take out a client, a customer for entertaining, not only would the customer's expense that I incur would be disallowable, but it's also be for any staff members that's incidental to that entertaining.
Oh, okay, fine. Yeah, of course, if you take staff along with you who also enjoy the entertaining, there's potentially impact on those guys as well. Okay, I'll have to think twice about some of our corporate hospitality then, I think, going forward. No, thanks for that. And I guess just sort of boiling it down slightly into the other differences from the accounts and the tax side of things as to how some expenses are either taxed or relieved. Certainly my understanding is from a company point of view, it's black and white. You either disallow or you allow, and then potentially if the employee has some benefit from whatever it is that's applied to the member of staff, as you've just touched on other examples are available, then that's kind of dealt with separately. But from the point of view of the corporation tax computation, it's either allowable or disallowable. Whereas talking about unincorporated sole traders partnership, we have the concept of private use, where you allow a percentage of that expense depending upon how much is business and how much is personal. Is that right?
Agreed. I think the common scenarios that you see there is when you've got either a sole trader or a partner in a business that incurs expenditure, let's say, or on their home.
Mm-hmm.
Let's say if they've got a home office, they use a proportion of that for business. Establishing what amount of that is claimable, as well as other expenses such as mobile telephones, maybe computer equipment, and motor vehicles as well.
Yeah, and I think that's the key area of expenditure that we probably get asked most often about, and I think will most likely warrant a podcast all of its own is company cars. But in that scenario, I think it really handily illustrates the difference between companies and sole trades. And so for those clients out there that are small, are unincorporated, haven't got a limited company, where there is a vehicle involved, they make an assessment themselves as to what percentage of the use of that vehicle is private and what percentage is business, and they effectively claim tax relief for the business proportion, whether that be 40%, 80%, whatever is reasonable. Whereas, of course, those organisations that are limited companies and have cars that the company either leases or purchases, that adjustment for private use is not a mechanism that is appropriate in a company. And if there is any non-incidental private use, a benefit in kind arises, that's the definition, is it?
Well, yeah, I think when you're looking at a company, again, if you provide a company car to a staff member, then it does vary on whether you're giving them a commercial vehicle like a van, or a personal car. The tax difference is slightly different from a company car tax perspective on which one you do provide an employee with. And again, we can have a whole separate podcast on P11D benefits and company cars, but ultimately, that you don't get that breakdown of personal use with a company, whereas you would do with a sole trader partnership business. Yeah,
ultimately, I think we see many queries these days because the tax treatment of company cars is much more based upon emissions and list price when new. So electric cars have become very popular. I think a large proportion of people driving electric cars do so because they're able to sort of lease or purchase through a limited company. But those rules change all the time. So there's a lot more to be said on company cars, and we will reconvene at a later date to talk about that in more detail. Just taking it in a different direction then. So something like, you touched on it earlier, clothing, uniforms, the argument made there is that the sole trader, I go to work and I always wear the same pair of jeans for work, and when I get home I change into different clothes. So that's a business expense, isn't it? But is it as simple as that?
I don't think it is as simple. I think it's a very nuanced and complex point, and I suppose there's a lot of grey areas with the legislation and HMRC guidance. But effectively, I think HMRC would expect that something you can wear outside of the sort of like business routine, they would see that as being a personal cost. So you've got that concept of duality of purpose. So for example, HMRC would probably allow a uniform where you've got let's say a polo shirt that's branded, because you're not expected to wear that outside of your business hours. Yeah. Whereas a suit, for example, which has no branding, HMRC would likely see that as well. Actually, you can wear that at work, but you can also wear it to personal functions.
Yeah, okay. So we don't see too many people wearing their Lovell Blake branded hoodie to the pub in the evening, and hence why it's staff uniform, I guess. Now that does make sense, I think, and I think for those individuals that are kind of thinking about what expenditure, especially around clothing and uniforms, would qualify, as you said, it is quite nuanced, and so I guess the advice there is to to speak to a professional and understand from the outset what would most likely qualify, because whilst it is nuanced, I guess there are some rules out there. There will have been cases, some of which are quite well known, where people have tried to get uniform and clothing through as tax deductible and have failed, and the quite high profile cases, certainly in the accounting press, which albeit might not be particularly widely read, but from our point of view is quite interesting.
Agreed. I think that's one thing we see HMRC looking into when they open pay-as-you-earn compliance checks into our clients.
Mm-hmm.
It's you get they look at the clothing, whether that is a deemed business expense or whether it has a personal benefit to either the employee.
Mm-hmm. And I think that's an area that we've seen the angle of approach from HMRC on inquiries. Sometimes does sort of take that position from the start. We've had an inquiry we recently worked on a client whereby they were a garage and there were a number of courtesy cars, and the angle was very much that there must be private use by the directors of those courtesy cars that sit on the forecourt and are used by customers. And that kind of drove the inquiry into all sorts of other areas, and there really wasn't any kind of weakness there at all. And ultimately, HMRC did agree that wasn't something that they could prove, but that was very much their angle. In that, yes, we agree that there are assets here or expenditure being undertaken, but we think there's private use. But from their point of view, I guess quite difficult to prove, but it doesn't mean to say that HMRC won't ask those questions. And when they do, you have to be organised and you have to have your advisors on hand to assist, and that itself can cost money to sort of defend your position, even if you've done nothing wrong.
I suppose this is looking at it from the outset, James, that when you are keeping your business records, that you are evidencing the fact that if you do have these types of expenses that may fall in the grey area, that you're keeping evidence that they are business-related expenses and that there is no personal use element. And it's keeping documents to support that fact rather than having a pay-as-you-earn compliance check opened and then trying to go back and revisit the evidence on proving the expenditure is business. Sorry.
Yeah, of course, I get that. Yeah, I think where I've had some quite frank discussions with business owners in the past is the understanding of what the business covering that cost or paying for that expense actually means, because ultimately, in my view, business owners need to understand the adjustments that their accountant is making to their accounts. So there may well be expenses which are not connected to the business whatsoever, and the accountant is treating those as either drawings in a sole trader business or posting to the director's loan account, which is effectively, the business owner's account with the business, and ultimately that would never even hit the P&L, never mind be disallowed for tax purposes. So there is even the concept here of some expenditure that the business pays for not even featuring in the accounts, isn't there?
Yeah, so I suppose looking at one of the problems that we see on a probably day in day out basis is that where you have this maybe small one-man bands that own a company, and they ultimately there's that confusion between the company being a separate legal entity. So they may have heard from a friend that actually you can put your personal meals or costs through the company, and they're deductible for business purposes. And although the funding in the business may allow that, ultimately the individual in that circumstances is deemed to be an employee, and if they're a director, and there will therefore be that adjustment to take that to the director's loan account to avoid that benefit in kind charge. Otherwise, if you don't make that adjustment, that'll be treated as a personal expense and subject to income tax and national insurance.
So I guess what I'm hearing there is, whilst the mechanism of correcting these types of errors may differ when it comes to unincorporated versus limited companies, the rules ultimately are the same, wholly and exclusively for business purposes. That's your business expense, and anything that maybe has that duality of purpose you need to take a view on and could be treated differently. But quite often a number of areas of expenditure they're not business costs and they should not be included within your business accounts. Makes a life a lot easier if you understand that from the start.
Agree, and I think that's the same if you're unincorporated business or operating through a company.
Yeah.
The tax adjustments that you see from a business point of view are very similar between the two, albeit that with the company you may be likely to have more staff in which to incur stuff like staff expenditure.
Mm-hmm. Excellent. I think from my point of view that's a really good outline. Obviously there's a lot more detail, but that often comes with specific advice. So I guess my message would be to consult an advisor and take advice on areas of expenditure, have a proper review of your tax affairs, and I guess your advice, Shaun, would be along those lines as well.
Agreed, James. I think seeking out professional advice is always useful for businesses. I think my key takeaway points from today's podcast is firstly ensure that you're keeping accurate and complete records, and also ensuring that you understand your tax obligations, whether that's understanding the tax deductible expenses, as well as sort of like your filing requirements. That includes your corporation tax, self-assessment, VAT, and pay as you earn.
Because those deadlines, they can fall at, that they are very different, aren't they? Whether you're an individual, sole trader business, a limited company, when you throw VAT into the mix, there's a lot of filing deadlines and obligations that a business owner has to stay on top of, aren't there?
Agreed, and I suppose that's where we step in to help businesses navigate that landscape. And then finally is we work in an industry where tax is always changing. I think at the moment we're seeing biannual changes with regards to tax legislation. So it's just to ensure that you're keeping on top of the latest tax rules and ensuring that your knowledge is up to date as much as possible. That's
a really important point, actually. I think it's all very well sort of checking you're doing the right thing at a moment in time, but we're seeing 6 monthly budgets and spring statements, and have been for some time. And quite often tax rules legislation are changed at both of those events. And so appointing an accountant and advisor who will update you as things change and inform you when you need to do things slightly differently is just so important, isn't it?
Agreed.
Excellent. Well, thank you, Shaun, for joining me today. It's been great to talk through this, a topic that I know will get a lot of attention. And as I say, plenty of scope there for some spin-offs in the future around company cars and some other areas. So I'm sure we will get together again